Hey everybody, how we doing? So let's talk quickly about the past 2 days. About 2 days ago, we hopped in long, 71.30, rode that out for about 350 points. Yesterday, hopped in long, wicked it perfectly, right at 72, 76, something of that nature, like right here, perfectly on this down candle here. That is also playing for about 350 point profit. I do know we closed a good majority of it early, but when you have a 350 point move still, you're still getting a good amount of profit off of that, or at least you should be. If you played my strategy in terms of not setting a target but moving up the stop loss. That was the point of yesterday's move. Was it was a little uncertain, so we wanted to move the stop loss up rather than set a specific target point. Woke up today, it was about 300 points in profit. I'm about 80% closed now, I believe, or 85% closed. I have about 15% left, aiming for around like 76.50, somewhere around there. Okay, so let's talk about what's on the horizon, what's coming up. Quickly, I want to go over a few things. We're going to talk about a lot of confluence today. We're going to talk about where the bulls are, where the bears are, in terms of trying to defend their zones. We're going to talk about the Wyckoff that's possibly in play. We'll talk about this rising wedge. We'll talk about confluence with the VPVR and the Ichimoku cloud. Okay, so let's get into all that. Things may look a little crowded here, but I'm trying to, as per some members' request the other day, I'm trying to give a bit more background detail into what I'm looking for, when I'm making all these changes and whatnot. And, a lot of the time it's difficult for me to constantly explain why I'm making a change. But all I can say is just know, in the background, I'm doing the best I can to, find the best positions for the group. But I don't always, sometimes it's better for me to put my effort into the chart and just give you guys the simple rundown than it is for me to explain every single time I change something, okay? So I'm going to give you guys a bit more of a background today of what type of things I look at, and we'll go through that, okay? So at the moment, we can see I have this Wyckoff drawn here, and it is playing fairly accurately, okay? And it will show confluence with the rising wedge here, okay? We also see the green zone is where the bulls have been defending. The red zone is where the bears will be defending. Now we can pull up some levels of confluence here. Let's pull up the VPVR, and we can see that the end of the high volume nodes is right around this area, okay? So if we are to break above here, this is probably where we'll be setting our stop when we talk about our short position for the falling wedge, okay? We'll get into that and how we're going to play the falling wedge. But here you could see confluence with the VPVR showing the resistance level that I already had plotted, along with the Wyckoff, the automatic rally here, as they would call it, and the zone that we have plotted. Then we could even bring in the Ichimoku cloud, and we can see that right around upper 76 is sort of where Ichimoku is showing its resistance, okay? So a lot of confluence in one area, sort of the zone we had plotted, the VPVR here, and a little bit above is the cloud, basically around 76.98. And if you would consider that the possibility that, sometimes you get that little FOMO wick, but it doesn't always pierce through, we don't always get a close up there, but it's always possible to get that little wick, okay? So there's some confluence in terms of looking at resistance. Now let's talk about how to possibly play this falling wedge. All right, let's see. Let's go down to a lower time frame here. Let's go down to the 1 hour. Okay, so here we can see once again our Wyckoff on the 1 hour, looking fairly accurate. I have redrawn it since I initially talked about it, for sure, but I don't see it as high confidence yet. This area here is sort of questionable, so to say, but I'm now having more confidence in it because of the confluence of the rising wedge here, okay? So, and this is my idea of how this rising wedge would have played in the first place. I would have seen it doing something like this. dropping down, bouncing one more time, coming back up, getting rejected, and then falling out. Okay? And then, as you guys know from in the past plays, we've seen this many times. The falling wedge falls out a little bit, and then it comes up, and it retests the wedge again. The bulls try to retest once again, and when that fails, that's when the real dump ensues. Okay? So we will be able to see if this Wyckoff is actually playing better within the next, day or two. And the great thing is, if it is playing, then we have a very good plot for the next more than 10 days or so. Okay, so this is definitely something I'll be keeping an eye on. All right, so how do we play a rising wedge? If you haven't checked my videos, always feel free to check my videos. You could see in the required videos, this video works, this video works. These will give you more background, more in-depth about how to play these, but I'll also explain to you how to play them right now. Okay, so multiple options with a rising wedge. You can play upon the upper touch, so pretend it does this, right? Pretend it comes up and it breaks through a little bit, it touches the top here. You could enter here, stop loss above. Okay, that's the first way to play it. And at this point, your stop doesn't need to be wider than probably 80 points or so. I think 80 points is typically good for the top of a wedge. Depending on the scenario, but this scenario, it looks fine for that. And obviously, I'll update in the future if not. Okay, so then what other ways can we play it? Let's say it comes down, it bounces, it comes up, it touches the top. Now it comes back down, right? It starts grinding along the bottom here, and you think, okay, this is on the verge of breaking. Okay, entry, stop loss above. Okay, and you can even, when it gets down to the tight area, draw a trend line, right? Okay, pretend that this here, we'll get down to the 15-minute chart, pretend that this is up here. Pretend that what's going on down here is what is going to occur up here. Okay, that's what I want you to pretend. I want you to take a trend line, and I want you to draw a trend line and say, okay, this is the bearish momentum right here. Okay, so if we break above this trend line, then my idea is probably invalidated. So what you can do is you can enter, stop loss above. Okay, literally requires a 50-point stop loss and to invalidate your idea, because you can see that this sort of accelerated bearish trend line here is preemptively, may cause the dump. So look for something like that to happen up here. So if this price action does this and it starts doing something right here, then get your little trend line going and say, okay, looks like this might dump out here. Stop loss goes right above, or right above. Okay, so that is a second way to play a rising wedge. Third way to play a rising wedge is to wait for the actual confirmation. There's a third way and there's a fourth way actually, but the fourth way is a bit more riskier because that doesn't always happen. Third way is to wait for confirmation of the break. So it's doing this, it breaks, you enter, stop loss back above. Okay, and the fourth way is it breaks, you wait for it to come back up for the retest. Once it fails, you jump in, stop loss back inside. Okay, but the fourth way doesn't always happen. Okay, probably the best risk reward scenario for this situation will probably be to enter up towards the top of the wedge, wherever that's going to be, or to enter upon sort of the testing of the break. So you're like, okay, I'm thinking this is going to break, enter, stop loss above. Okay, and now typically, like I said, you probably don't need to stop more than 80 or 100 points. Okay, so that's how we will play that rising wedge. I will keep you guys updated in terms of that, but as I've always said, I do my best to provide the entries, right? But you do have to understand as well that a lot of these plays are very they have to be set up in a personal manner, because get this, you may be going out to dinner, you may be going to sleep. I don't know your schedule, and you might be entering up here, but then I see that we start dropping, and I see that we get like this strong bounce or something, and then I might call for a position close. You never know, because I'm always watching the data all day. So just make sure that you're available in terms of if you're entering position typically, or some people who might be awake when this happens, or some people might be awake when this happens. You have to play it personal scenario, personal risk. Where do you want your stop loss to be? How many points are you willing to risk? But like I said, I think the safest option will probably be to watch for a rejection of the upper here. So let's pretend it does this. If it drops down, comes back up, we watch it get rejected around here or something. Okay, we enter here. Stop loss is a bit above the wedge right here. And that would probably be about 100 points. Let's see. Yeah, so like 100, 112 points, somewhere around there, okay? So that is probably the strategy I will look to personally employ. I knew that was going to happen. Okay. So at this point, that covers pretty much what we need to talk about for now. Is there any other charts I need to discuss? No, everything else is looking pretty good. I'll talk about this little RSI strategy at another time if it becomes necessary. Yeah, I think we're good, guys. Okay, so that's the game plan for the day. As far as these zones go, let's just take a look at. Remember that I am using the Bitfinex chart here, but when we're talking about entry points, we do want to watch the BitMEX chart as well, because sometimes we can see these wicks FOMO up a bit. So let's just draw this out real quick here and see about where the entry looks like. Okay, so we can see a bit of some FOMO wicks here above the top of the wedge. This is our bearish area here, between, oh, look at how that perfectly hit in there. Nice. I think that was one of my old calls, but like I said, I did call for pull of most orders because I was going to sleep. So, but yeah, that's a nice little wick right there as an entry point for sure. But as you know, also as of recently, honestly, rising wedges, and this was more during the uptrend, but rising wedges were mooning, like literally left and right. They were doing this, and they were going straight out the top. So we definitely do want to be careful. Make sure you always have stop in place as well. I wouldn't say this is the highest confidence play, although there is some good confluence, but we do have to consider strong pump here, guys. Strong pump here, even though this is a bit of a BART. But look at the buy volume. We want to get over to Finex to look at volume, but look at the buy volume on this candle, guys. Okay, this was more than just retail money, so do consider that they may have thought this was the bottom, and now we are being pushed upwards with support by whatever big money did this move. Okay, we always want to think about things in a psychological perspective as well. Okay, so this area here is from 76.22 to about 76.66. That's sort of the bearish order block that we're looking at up here. What is it on Finex? On Finex, it is about the same. About 7,600 to about 76.50-ish, 76.60-ish. Okay, so I think we're all good there. If anyone has any questions, feel free to let me know. You can always DM me. Doing really well lately. I'm very satisfied with the past 2 days. Like I said, just some quick talk about things. I posted in the announcements about how sometimes people become impatient, and it's totally okay. I understand that people join the group and they want to move right away. But please understand that I do my best to only trade with high confidence. I take all your money just as seriously as I take my own money, and I take my own money very, very seriously. Okay, so if you notice that all our recent plays are successful, that's because it's not a brag, but they're successful because I look to trade with high confidence. Okay, so I let you know when I have higher confidence, I let you know when I have medium confidence, I let you know when I have low confidence. And you guys joined the group for a reason, because at one point in time, you trusted my judgment, and I ask you that, if you're going to pay me in order to trust my judgment, then please listen to me and please trust my judgment. I'm doing this basically 24 hours a day, 7 days a week, 365. I'm doing my very best to keep you guys in the loop when it comes to, if we're looking for new altcoins, or if we're looking for a BitMEX play, or whatever the situation is. Have faith that I am looking into it, okay? Because I get a lot of messages, or should we jump in this alt, should we jump in that? And like I said, there was times in the past when we were in the big consolidation around 6,000, and I was telling people don't short, and everyone was getting super bearish, and I was saying don't short, and people got liquidated because of the huge pump. And then there was people who were buying altcoins when I was saying don't buy altcoins because they were just getting impatient, and I'm saying don't buy altcoins. And now over the past week or so, I get 5 or 6 messages of people saying, hey Chase, I bought altcoins when you said not to buy altcoins. I'm down 50%. What do I do? And then I have people from the other day who were shorting when Twitter sentiment was super bearish. Everyone's saying we're going sub 6K. I say, hey, ignore those people. Those people don't know what they're talking about. And it doesn't mean that we can't go sub 7K or sub 6K or whatever you want to say. But if I see that in the technical analysis, then I'll let you guys know 100%, of course. So try not to get wrapped up in these, yes men on Twitter who are just trying to get likes and retweets. They don't even know what they're talking about. Okay, if they knew what they were talking about, they'd be posting proof of their entries. They'd be posting proof of their closes, and I don't see that hardly anywhere. There's a few people on Twitter who post some solid proof of their plays, and those are the people you should look at. Besides that, it's just a big joke. People are just talking just to talk, and they really don't know what they're talking about at all. So don't be swayed by that stuff. And like I said, if you're here to once upon a time, or nowadays, you trust what I've been doing, you believe in what I'm doing, then stick with me, and I'm going to do the best I can by you. Okay, and this was just an announcement I put out for lots of new members. Wasn't mad at anyone. I'm not upset at anyone. What I am upset with is that I showed you a path to gain money, and you instead chose a path to lose your money when I specifically told you not to do it, and I specifically told you what to do. Okay, because like I said, I take your money as seriously as I take my own, and the whole point of this group is for people to learn technical analysis and learn how the market works, and to earn at the same time. So that's what it's all about, and I'm doing that every day, and I do my best to do that every day. So thank you very much, everybody. Have a great day, and let's keep making money. Let's go.